Watch this video and I'll show you how this played out in Square today. I'm Jeff Cooper, creator of the Hit and Run method, and we're going to show you the earnings reversal in Square today. Earnings typically see accelerated volatility in front of earnings. Well, let me put it this way. Earnings typically see accelerated volatility. Positioning in front of earnings means assuming a binary bet one way or the other. In this video, I'm going to show you how you don't have to assume the risk of positioning in front of earnings to capitalize on an earnings move. How do I do this? With my earnings reversal orb strategy. Now, an orb is simply an opening range breakout, a breakout over the first 30 minutes range. This is a daily square. When a stock gets smacked on earnings, making a first hour low, and then has an opening range breakout, it often signals a rocket ride higher. However, there are three important criteria. Not all earnings reversals are created equal. The first criteria is you need to be in a strongly trending market. Obviously, the market has been on a tear. Number two, you need to be in a strongly trending stock. You can see here Square is above its rising 20-day, that's this red line, and its rising 50-day moving average here. So those two criteria played out. The third is you need a pullback to well-defined support within this context of an earnings smackdown first before a reversal. And here you can see on the open today, after reporting, Square gets tagged and plunges down to its 20-day moving average, which ties to this lateral support right here. Okay, let's take a look at the 10-minute now. You'll see what I'm talking about. So here's the opening plunge today, and not only did it make a first hour low, remember these are 10-minute bars, it made an opening spike low and immediately bounced. Pulls back to test the bounce, but here's the opening range breakout. This is the high of the first 30 minutes range, and an orb is triggered right here on trade over this bracket. I bracket the first 30 minutes right here. This is the first 30 minutes, these three bars, and I bracket that, and here look at the pop when Square comes out of this range and triggers our opening range breakout. So a pullback to the rising 20-day moving average satisfied another hit and run buy setup. This is what I call a holy grail. A pullback to the rising 20-day is called a holy grail because it so often strikes a great buy setup, or in a stock that is in a strong downtrend and bounces up to its 20-day. Often that offers a good risk to reward sell setup. Anyway, so Square pulled back to the rising 20-day, which we showed you right here early in the morning. In fact, right after the open, right down here to the 75 strike, with tomorrow being an option, a weekly option expiration. However, the accelerated momentum with earnings, you don't always get the luxury of waiting to the next day to get long off these holy grail buy setups on the daily. With earnings reversals, stocks turn on a dime. Most traders cannot. So here I'm going to give you the tip-off that pinpoints how to hop on board the rocket before it leaves the launching pad. This is the opening range breakout method, or the orb. However, when it's in tandem with a stock that offsets the gap down, which occurred right here, when the gap is offset, I refer to that as a swish. Look, no net. Right through the net, right through the gap, and it extends. So checking Square, we see that an opening range breakout occurred at around 77 and 3/4 this morning. And then through the gap, this plays out at around 79.50. And within a few hours, Square satisfies a 4-point move. The swish, or this move through the open gap, is a powerful, often a powerful setup. Players who get stopped out recognize the reversal and rush to reload. At the same time, shorts recognize the squeeze is on, so once Square turned green through the gap, they have to scramble to get out of the way. These two strategies in combo, the opening range breakout and the swish, underpinned Square's explosive short-term move today. What does Square do tomorrow? Who knows? This is hit and run. If these kind of strategies, this short-term approach to the market, where we try to make mountains out of peanuts, stacking up a lot of small trades into a big win at the end of the week, at the end of the month, at the end of the year. If this approach is interesting to you, please like the video and be sure to click on the link. The bottom line is, this hit and run method, this hit and run approach to the market is what has worked for me for over 35 years in trading. I've made a career out of it. I make a living out of it. And it's important to remember that you have to measure risk not just by how much you can lose by where your stop is in the market. You have to measure risk in terms of how long you are exposed to the market, how long you are involved. Because even if the stock doesn't stop you out and stays flat for weeks at a time, that ties your capital up, and it also costs you emotional capital. So if the hit and run method interests you, click on the link, get a free copy of my best-selling classic Hit and Run Trading, and get a free trial to my service. See you next time.